Another concern was about the hyperscaler capex and an announcement coming out of China again that they had developed lithography machines which were going to compete with ASML. And ASML is the only company which can make lithography machines, and these lithography machines are primarily used for semiconductor manufacturing. These machines are huge. You need multiple chartered jumbo jets to transfer these machines to wherever they are going to be installed. They cost 300 to 400 million dollars each, and that's why only one company in the world is able to produce it. China announced that they have now reached a stage where they are beginning to make the lower end of these machines. And anyways, I think one should always assume that if there is one company in the world that is making it, there will be more companies that will enter the competition and make these machines. Uh, so that also weighed on the markets during the month of July. Add on to that, the geopolitical uncertainty from the increase in crude oil prices did not help. And so all these factors put together, we saw a massive volatility. And because of this, a lot of leveraged bets. There were a lot of leveraged ETFs in Korea, a hedge fund based out of New York, which was highly levered to semiconductor, blew up. And all these were technical factors. There's no fundamental change in the story of AI or the usage of AI or the growth of AI. These are purely technical factors which happened because of unrelated issues. And that's why we were very confident that these are technical issues, and as soon as these issues go away, the markets will recover. And you get these issues every once in 12 to 18 months, you get this. Last time we saw such issues was in March when the US-Iran war was announced. At that time, there were DeepSeek was a Chinese LLM model that was also announced roughly at the same time. So those two factors caused the market to crash briefly for a month or so. But after that, the markets recovered. So again, whenever there are such technical pullbacks, we always believe that if you have the capacity to go through it and come out, on the other side, maintaining your positions and in fact increasing your positions, then you will do very well. People who have taken leverage, like the hedge fund in New York that blew up, or the leveraged ETFs in out of South Korea, they cannot sustain such volatility, and so they have to book their losses, and they cannot continue participating in the upside that follows such volatility. And that is why we feel that you get such chances every once in 12 to 18 months, and this would be a very good time to add more money if you already have it, or initiate new position if you haven't already done so. These chances, they don't last for more than a week or two, because the markets these days, they react to news fairly quickly, and they go down also fast and come back up also equally quickly. So we do feel that this is a good time to add more money if you haven't already done so. Another issue that we have seen in the market was the hyperscaler capex concerns. Now, these capex concerns have been coming from the fact that Amazon, Microsoft, and Google, these are the three hyperscalers, they are spending roughly close to $800 billion to $1 trillion per year in capex. However, market reaction to Amazon and Microsoft earnings in the last week are showing now that those concerns are now ebbing. The reason for that is that they are seeing that these companies, while they are doing capex, they are also generating a lot of cash flow, a lot of EBIT. Their EBIT margins are in the range of 30 to 40%. So if you are spending on something that is going to give you 30 to 40% EBIT margins, that is not wrong. The market is slowly coming around to that idea, and the reaction to Amazon and Microsoft's post-earnings stock prices, which were up roughly 15%, each one of them, shows that the market is realizing that. And now another thing that we will quickly see is that now this capex has been going on for 1 year, which means that the earnings from that will start showing up. And you saw that in each one of them, Google, Microsoft, Amazon, each one of them grew somewhere between 40 to 80% in their AI infrastructure business. Their revenues grew anywhere from 40 to 80%. So the capex that they had done last year, they are doing this year, is now showing its impact in the earnings and revenue part. And as soon as you start seeing that impact, I think the markets realize that these are massive, massive earnings generators. And that's why the market is coming back to now appreciating that fact.